Good day. Welcome to this lecture on accounting as a tool for managers. Our objectives in this lecture are as follows. 1. Define managerial accounting and identify the three primary responsibilities of management. 2. Distinguish between financial and managerial accounting. 3. Explain the primary roles and skills required of managerial accountants. 4. Describe the role of the Institute of Management Accountants and the Chartered Institute of Management Accountants and the use of ethical standards. And 5. Describe trends in today's business environment and analyze their impact on accounting. Objective 1. Define managerial accounting and identify the three primary responsibilities of management. Managerial accounting may be defined as the process that allows decision makers to set and evaluate business goals by determining 1. What information decision makers need to make a particular decision, and 2. How to analyze and communicate this information. So the job of the management accountant then is to determine what are the informational requirements of the decision makers within the organization and how to analyze and communicate this information to the decision makers. The three primary responsibilities of management are planning, controlling, and evaluating. One of the first items on a new company's agenda is the creation of a mission statement. A mission statement is a short statement of a company's purpose and focus. This statement should be broad enough so that it will encompass future growth and changes to the company. An example of a good mission statement is the one for Google. Google's mission statement is, "Our mission is to organize the world's information and make it universally accessible and useful." This mission statement is then the central focus of the organization, and the management functions of planning, controlling, and evaluating all revolve around the mission statement of the organization. Planning is the process of setting goals and determining the objectives or the targets that need to be met in order to meet the company's goals. Controlling involves the monitoring of the planning objectives that were put into place. Evaluating involves comparing actual results against expected results, and this can occur at the product, department, division, and company levels. Objective 2. Distinguish between financial and managerial accounting. We can look at this distinction between financial and managerial accounting from different perspectives. Firstly, looked at from the perspective of the users of the information, the users of financial accounting information are external to the organization, for example, the shareholders, creditors, and regulators. The users of managerial accounting information are internal to the organization, for example, the managers and the employees of the organization. Types of reports. The financial statements that are prepared under financial accounting comprise the balance sheet, the income statement, and the cash flow statement. Reports that are prepared by the management accountant are varied in nature, and examples of these reports are job cost sheets, production cost reports, and cost of quality reports. The frequency of preparation of the reports. Financial accounting generally prepares reports twice a year an interim report after 6 months of the financial year, and a final report covering the 12 months of the financial year. Managerial accountants prepare reports as often as required. So it could be monthly, it could be quarterly, it could be weekly, it could even be daily. The purpose for which financial statements are prepared. Under financial accounting, the objective of preparing the financial statements is to help the external users make decisions. These decisions may relate to whether they should buy shares in the company, an investment decision, or whether a potential creditor should extend credit to the company. The objective of managerial accounting information is to assist the internal users to make decisions relating to planning, controlling, and evaluating. The focus of the information. Financial accounting information focuses on the company as a whole. So the information is aggregated in nature, and financial accounting information normally has to comply with IFRS, International Financial Reporting Standards. The focus of managerial accounting information is on subunits of the organization, for example, a department. Managerial accounting reports are normally very detailed in nature, and they are not restricted by having to comply with the requirements of IFRS. So the management accountant can apply any basis of preparation that he deems appropriate. The nature of the reports. Financial accounting reports normally report in monetary terms, whereas managerial accounting reports are in monetary terms and in non-monetary terms. For example, a management accounting report may report on physical units produced during the period. That would be a non-monetary report item. Verification of the information. Financial accounting statements normally have to be audited, whereas managerial accounting statements do not have an audit requirement. This is an example of a typical report that is prepared by the management accountant, and the objective of this report is to track costs. This company produces 2 types of products, a vanilla flavored ice cream and a berry flavored ice cream. This report card is for producing 500 gallons of vanilla and 500 gallons of berry. In order to produce 500 gallons, the ingredients that were used are listed here, and the quantity of each ingredient that was used is listed under the quantity column, and then the total cost for those ingredients is under the total cost column. The cost per gallon is the total cost of the ingredient divided by 500 in each case. Okay, that will then give us the cost of that ingredient per gallon of production. And if you sum up the individual costs for each ingredient, you'll arrive at the total cost per gallon for 500 gallons. And in this case here, we can see producing this ice cream cost us R2.80 per gallon. And we can then compare that with the berry flavored ice cream, which cost R3.55 per gallon. A cost analysis of this nature helps the company to determine which products to produce, in what quantities, and what prices to charge. Objective 3. Explain the primary roles and skills required of managerial accountants. Because managerial accountants play a different role than financial accountants, it is important to see where managerial accountants fit into the organizational structure, the skills required, and the types of jobs and certifications that managerial accountants may obtain. This is an example of an organizational chart for a typical company. At the top of the hierarchy is the board of directors, and below that you have the CEO and then the senior managers. Where does the management accountant fit into this organizational structure? Well, the job of the management accountant is to provide information at all levels of the organization. So the management accountant may prepare information that's required by the board of directors, or the management accountant may prepare information that is required by the sales manager. So at any level of the organization, the management accountant may be called upon to play a role. The skills required of managerial accountants. Firstly, the managerial accountant needs to demonstrate commercial awareness, collaboration, because the management accountant is going to work in a team, so he must be able to collaborate with other members of his team, and he must be able to collaborate with different departments within the organization. Effective communication skills, strong technology talents, extensive analytical abilities, and elevated ethical values. There are many jobs that an accountant, either financial or managerial, can obtain upon graduation, and these positions open the door to many upper level management opportunities, as shown in the following chart. So a management accountant then has the option of growing into various senior roles. So he may start at the bottom end of the organization, but as he moves up, his salary will increase and his level of seniority will rise. Common accounting related qualifications are listed here. A chartered accountant or a chartered management accountant. This qualification is obtained from CIMA, the Chartered Global Management Accountant, the Certified Management Accountant. This is a US-based qualification. So there are various professional qualifications that an accountant could aspire to. Objective 4. Describe the role of IMA and CIMA and the use of ethical standards. IMA and CIMA are professional organizations for management accountants that provide research, education, a means of knowledge sharing, and practice development for their members. The IMA issues the Certified Management Accountant certification, and CIMA issues the Chartered Management Accountant qualification. Their exams cover essential managerial accounting topics as well as topics on economics and finance. The institutes also develop standards and principles to help management accountants deal with ethical challenges. Objective 5. Describe trends in today's business environment and analyze their impact on accounting. The major trends prevalent in today's business environment are enterprise resource planning systems, automation, outsourcing, lean production, balanced scorecard, globalization, and sustainability. These trends shape not only how businesses make decisions, but how managerial accounting has evolved and will continue to evolve to meet the needs of the organizations. So as the needs of the organizations change as a result of these trends, then management accounting also needs to evolve in order to meet the new information needs of the organization. Enterprise resource planning systems, these are software systems that streamline the operations of the company by coordinating the various systems that are used within the company. This diagram represents an enterprise resource planning system that has 8 different components. So the job of the enterprise resource planning system then is to bring together these components into one coordinated system, so that if, for example, distribution requires some information that is within the product inventory database, distribution must be able to access the product inventory database in order to obtain the information that it requires. In effect, then, what the enterprise resource planning system does is that it allows for the subcomponents to communicate with one another. Automation. This is a method of using systems such as computers or robots to operate different processes and machinery to improve efficiencies and lower direct labor costs. Many complex processes are performed more easily by computers than human beings. Outsourcing. This is the hiring of workers outside of the company who perform their tasks inside or outside of the country. Lean production. A lean business model is one in which a company strives to eliminate waste in its products without compromising on fulfilling the company's mission. Balanced scorecard. The balanced scorecard approach uses both financial and non-financial measures to evaluate performance. Globalization. This is the development of business through international links or extending social and cultural aspects around the world. Sustainability. With sustainability, companies make decisions that meet the needs of the present without compromising the needs of future generations. An important part of sustainability is responding to the consequences of climate change. That brings us to the end of the lecture on Chapter 1. Thank you.